Alright everyone, Cowboy Trades here. Feels good to be back. If you didn't know, I was fighting in the Kendo International Memeshi competition, hence my inactivity for the past week. If you do want to watch my recorded fights, I'll leave a link to this private video down below. But let's get back to our regularly scheduled programming, my friends, and let's see what's happened in the past week. So as I'm sure all of you know, news has pretty much been ruling these markets much more than technical analysis. So let's discuss a few important headlines that you may have missed. Number one, substantial amount of assets either stolen or missing from FTX. We already knew this, however, FTX's lawyer came out and said this. Their lawyer also dropped Sam Bankman-Fried. Another thing we have known for a little while is that they bought a $300 million property in the Bahamas. What we didn't know until quite recently is that Sam Bankman-Fried's FTX, his parents and senior executives have bought at least 19 properties worth nearly 121 million in the Bahamas over the past 2 years. And of course, they've been doing that all with, FTX's customers' funds, which is disgusting. And Binance, the largest crypto exchange in the world, is currently under investigation for allegedly violating rules related to payment services in Singapore. If you didn't know, Binance is not licensed in Singapore, and once again, they allegedly were actively soliciting users in Singapore. So, not looking good for Binance, but it's not the first time they've been under investigation. I'm sure they'll be fine. But yeah, that's all the news that happened while I was gone. Really not too much to update. The only other thing of any importance that's coming up anytime soon is the Fed minutes, which is going to be happening a little bit later on the day. I do think we're going to see some more hawkish comments here. In fact, literally nothing's changed from the Jerome Powell Jackson Hole conference. And if you've been watching this channel, you know that I always like to, pull up comments from the Fed and talk about what the Fed is talking about. Not many Fed comments have been made. Fed Daily, however, said a 5% rate peak is a good starting point, but it could be raised even further. If you don't know what this is in correlation to, he's talking about the interest rates, which are currently residing around about 4%. Now, we had a 25% increase the last time we had our interest rate hike, and this was a 75 basis point increase. Another 25% increase or another 75 basis points could bring us right up to this 5% right off the back. Now, historically, if you look, this is kind of a pivotal area for the interest rates. Once again, they can definitely go higher. When we look in 2018, you can see the interest rates actually peaked out at 5.29% before, dramatically cascading to the downside, which didn't necessarily mean that the exact bottom was in at that moment in time. In fact, you can see that after the Fed pivoted, there was still a little bit more pain for the stock market to come. So we'll keep you up to date on this, but nonetheless, when the Fed did pivot in, this time over here, 2003 all the way up to 2007, when they were raising the interest rates were around about 1% before they just dramatically moved them up. I mean, interest rates before this whole, shenanigans have been going on were down here at 0.25, like literally historic lows for the interest rates. So we've had so much cheap money flow into the economy that no wonder we're seeing the pain of it all being bled back out of the system. Now, let's move on to Bitcoin. Let's talk about the Bitcoin TA. Like I said, in terms of the news, there wasn't a lot to update you on, and it's going to be the same story for the Bitcoin price action. So I am going to fly through this. You can see, this is the date that I left about 6 or 7 days ago. The price did come down like we predicted, about another 7.25% and made new lows. But since I've been gone, since my last video, the Bitcoin liquidity crunch, we're really only down about 2%, and you can see this is where I left and this is where we're at now. Once again, since I left, we are still in the same bear flag that we drew out. We did break to the downside of this, and this was like a failed move equals a fast move in the opposite direction because we instantly started moving back up to the upside. Now, we basically were moving to the upside because before Fed minutes, the stock market indices like to push up, and they normally dump after Fed minutes. So Bitcoin, in my opinion, is really just following on a slower basis what the S&P 500 is doing right now. We're still in this bear flag. I'll keep you up to date on whether we break to the upside or the downside of this, and also I do want you to know I'm personally not trading right now. If you watch my past couple of videos, you know that we made 2 trades on KDA. We shorted at 135 and 140 down to $1. We hit the take profit on both of those trades, and we also quite recently entered a Bitcoin short that was about 30% in the profit. So We almost did about a 2x on, these 3 trades that we collectively ran over the past 10 days. I'm in absolutely no rush to run into another trade. This is what makes us successful and profitable traders. We look for the trades with the highest probability of working out, and the ones that we're not so sure of, we wait on the sidelines until a position of strength appears. And once again, we're still in this bear flag, not too much to update from that. One thing that I did forget to mention in last week's videos is that we did actually come down and hit one of my first macro price targets. We were talking about this basically from round about 23,000 or so when this fib had finally developed at this peak, but the 1.236 Fibonacci, 15,800, I'm sure you already know this, but we've come down and hit this price target. In terms of where's the next macro move to come to the downside, yes, we've got a 1.618 Fibonacci down here at 12,800. I don't think that's going to happen in the immediate short term. I think it will take a little bit of time to come down there, unless we have a lot of bearish news come out, maybe some more exchanges go bust, then 100% could be plausible, which is why I've been saying, news is really ruling these markets right now, not TA. So, maybe a good news event comes out and I'll present a new short for you, but for right now, I'm very happy sitting on the sidelines. Now, on the weekly time frame, let's zoom out and look at some other price targets. We talked about, as you can see here, we've bounced from the 15,700 region or 15,800 region. If we zoom out a little bit, you can actually see where's the next volume cluster. Well, we've got a ton of the book depth is quite nice here. We've got a range of previous buy orders right around 12,000 down to about 11,000. Now, if we drag this out, you can see this is a little bit more bearish, the 1.618 Fibonacci, but if I do drag out this box over here, you can see there's touch points at 14,000, there's touch points at 13,200, there's touch points at 12,300. Nonetheless, 14,000 is the top of this range, and if you are an Elliott waver, you might notice, if I draw this right, you've got a 1 wave, you've got a 2 wave, you've got a 3 wave, you've got a 4 wave, and you've got a 5 wave. So if you do believe that we are, obviously in some, well, actually, to be honest, this can't be an ABC correction anymore because we've done 1, 2, 3, 4, and this looks like the 5 wave. It looks like we've had, we're currently in a 5 wave correction back down to the 1 wave, and obviously, if you're an Elliott waver, on the weekly time frame, worst case scenario, we should be bottoming at the candle body close, 11,400, but technically, we could bottom at 14,000. That is the next price target I've got in the immediate short term. I personally don't think Bitcoin bottoms before we hit 12,000. But is that stopping me from buying 16, 15, 14, 13, 12, 11, 10? Absolutely not. If you've been watching the channel, while everyone was bullish and buying in this range above Bitcoin's lows at 17,600, they bought in every single range above here, but now they don't want to buy here. This is why, if you've been watching the channel, we do the opposite of everyone else. We didn't buy in this range, and we're starting to buy down at these ranges. This is what the smart money is going to be doing, but more about the smart money in my next video. I'll try to upload that in a few hours time. We're going to be whale watching and looking at some on-chain metrics and looking at the next move for the smart money. Now, one reason why, yes, I'm bearish and I think we break lower, but one reason why I'm not shorting right now is because, like I said, we're not in a position of strength. If we come down to the on-chain metrics, on the daily time frame, you can see the squeeze momentum indicator has had a pretty nasty move down already from 21,500. If you remember, we were shorting here. And once again, if we push up to the upside, I'll be telling you to short from a higher position. I tell you to short from here. I tell you to short from here. I tell you to short from here. I'm not going to be telling you to short from down here because, like I said, we short from positions of strength. On the daily time frame for the squeeze momentum indicator, we're starting to lose a little bit of that bearish momentum, and I really don't think that we push up too high. I would be struggled to believe that we could even push up that much further than we are right now, but nonetheless, some of these momentum indicators, money flow index is showing that we could push up a little bit more. Liquidity conditions could get a little bit looser, and we could get a little bit more money in the market before pushing back down. The stock RSI as well is about halfway through a break to the upside, so this is really showing extreme weakness in the markets right now. If we clear up this chart, let's find out where the EMA ribbons are going to be, because as you could imagine, on the stock RSI, a lot of the time we run into the squeeze momentum, we run into the EMA ribbons, and then that is basically when you have that reversion to the mean and the stock RSI is ready to roll back down. So could we push up a little bit further, 17,500 before breaking back down? It's a possibility. I'm not going to be longing up to anything. I'm not going to be shorting from here. But what I will say is if we do push up, if we do have a reversion to the mean back into the EMA ribbons, and some of these metrics, the stock RSI, the squeeze momentum indicator, the money flow index, they start telling me that we're topping out, that's when I'm going to be letting you know that I'll be opening a short from a position of strength, not from down here. So let's move on from this. So yeah, as you can see, like I said at the start of the video, really the technicals haven't changed. We're the same price as we were last week. Macro price targets are the same, micro price targets are the same. Momentum has started to subside a little bit. That's the only real thing that has changed. And once again, we had a plan. We've had the same plan for the past 6 months, and this is really the time to just kind of sit on the sidelines and watch the plan play out. As we previously said, we were going to start buying in heavily at 17, 16, 15, 14. All of this is still in fruition. If we break down to the downside, that's a win for us because we get to buy at 15, we get to buy at 14, we get to buy at 13, we get to buy at 12. If it starts to push to the upside, we're not in a short because, we're not biased bears. We're bearish, but we're bearish from positions of strength. We're not bearish after, this huge candle to the downside. Once again, doesn't mean I don't think that we can push lower. We definitely can, especially if bearish news comes out, but I would not be telling you to short unless we have a bounce to the upside. If we have a bounce, that's great. We can open a new short, open a new trade, break down to lower levels. We can use some of that profit to start DCAing in at these lower levels. So on the sidelines right now, with some of these buys triggering for my Bitcoin buys at 17, 16, 15K almost got triggered. We didn't quite hit it, 15,300 or so. My plan is unchanged. Just thought I'd let you know that. So moving on, the stock market. The stock market has been a little bit tricky since I've been gone. Now, if we do come over to the DXY, you can actually see we were putting in something like a bottom formation, a diamond bottom, and we broke to the upside of it, and then we had a throwback down. And then you might be looking at this and thinking, okay, we're bull flagging now, and obviously, we just had a throwback into the diamond, and we should be getting ready to push higher, right? But no, the bull flag broke to the downside as well. So the DXY is looking a little bit weak right now, which is another reason why I would not actively be shorting Bitcoin until we have that position of strength, until we have that strong bounce coming back for the DXY where we know that's where the DXY is going to start tearing faces. Now, over on the E-mini futures for the S&P 500, we basically had almost a very similar pattern. You can see that we did have a diamond top formation that we broke to the upside of. Now, you can still argue, hey, you could say, hey, this line of attack was very, very brutal. And I would agree with that. I mean, if you do zoom out, you can see situations before where, you may have drawn, a diamond top or a diamond bottom and it had a brutal line of attack. And normally what happens when you've got a brutal line of attack in these is you normally have a throwback to the top and, you kind of end up having this kind of line of attack, which is less steep than this line of attack over here. So I do think it is definitely possible that something like this could be playing out for the S&P 500 where, we are still in a diamond top formation. Does that mean that we can't push a little bit higher and maybe take out this 450 before rolling back down? It doesn't mean that at all. A lot of the time, these diamond tops actually have fake outs over the top, and then a failed move equals a fast move in the opposite direction. If you look back in the S&P 500, you'll see that this diamond top failed move equals a fast move happens all the time. Now, in terms of the S&P 500, let me get to that chart in a second. In the higher time frames, like I said, lower time frames may not be the right time to short. In the higher time frames, you see a slightly different picture. Let me clear this up a bit. Get rid of these EMA ribbons, because we are starting to run into resistance right now. And like I said, I do think, if we push up, we can get past this 450. We can even get up to 4,100 for the S&P 500 before having a brutal break to the downside. And you can also see EMA ribbons a lot of the time. Well, I say a lot of the time, every time. At the top here, we topped above the EMA ribbons. Then we broke down. When we broke above and found resistance again, we topped just above the EMA ribbons. Then we broke down, we broke up and topped just above the EMA ribbons. Then we broke down, and, we haven't quite topped out above the top of the EMA ribbons. And, when you're looking at Bitcoin, you can see momentum still potentially has a little bit to move to the upside. When you're looking at the DXY doesn't definitively look like it's found a bottom yet. And when you look at the S&P 500, you can definitely argue that, hey, if you're entering, a 3x short on Bitcoin right now, there's nothing to worry about. And I would agree with that. But I would be saying the S&P 500 is very close to topping out. The DXY is very close to finding a bottom. And we could just have a little bit more of a push, potentially, Potentially not. Fed minutes could absolutely cart us to the downside if they come out with hawkish policy, which is why you should definitely keep your eyes on the Fed minutes that will be coming out a few hours after I do upload this video. But you can see for the S&P 500 as well, on the 4-hour time frame, we've had a 1, 2, 3, 4, 5 bearish wave to the downside, and then you can see, if I remove these microwave counts, you can see that we've had an A, B, C bounce back to the upside. So that's pretty much all I've got. In terms of market sentiment as well, you can see the retail traders are starting to get very excited now. Bitcoin's at 16,000. They're saying Bitcoin's bottomed again. It's bottomed again. Can you believe it? Once again, Bitcoin has bottomed. But all jokes aside, I genuinely do think it's almost time to short. Retail traders are getting excited while Bitcoin's at 16,000, and momentum says, hey, we can push up a little bit higher, but in general, it looks like we're getting ready to snap down to the downside very soon. So, you know, like I said, not a lot has changed in terms of the technicals today, not a lot has changed in terms of the news. I'm going to wrap it up here. I'm not going to waste your time. There's no point in me trying to find something else to talk about when I'm very confident in all the analysis that I've given you over the past couple of days anyways. But anyways, it's great to be back, my friends. If you did enjoy the content, make sure to hit that like button, comment, subscribe, share the videos with your friends. These are all free ways you can help the channel. Liking, commenting, any interaction helps push my videos out to a new audience. YouTube loves when you engage. So if you want to help me out, hit the like button. That's all I ask. As always, cowboy out. Peace.